Okay, my name is Pavel Kravchenko. I'm co-founder of Distributed Lab. Together with InnoHub, we're doing a lot of webinars in UAE, in this very interesting market. And we try to bring the best knowledge, the best people, the best expertise for the wide audience and discuss very hot topics in deep. My background is information security, specifically like cryptography. I've got PhD degree in it, and I try to dig deep and to really understand things. And today we have an amazing speaker, George. George will introduce himself. He has a long list of accomplishments. I'm really excited to this discussion, and we definitely will touch topics related to security, to blockchain, to many other things that audience will ask us. And before we start, I want George, stage is yours. Please introduce yourself and tell how you ended up doing what you do.
Okay, actually, it's the whole journey about IT has been quite interesting. It dates back to I guess Ottawa and Canada when we were studying at the time mathematics. So my background is actually mathematics. So I ended up being introduced to IT actually at the time to predict lake levels, if you can imagine. So it was a usage of application of statistics. This is in the early days of computing where, traditional IBM PC did not exist at that time, but things evolved quite rapidly. I did remember using punch cards in the first few months of a co-op work term. And then either you like it or you hate it. But if you have the patience and if you have the perseverance, then obviously IT is an extremely exciting field because it's every day is a different day. So I spent about the first 10 years of work in Canada, and the remaining 20 or so have been around the Middle East, but I've traveled around the world. So far I've done about probably 55, close to 60 countries. And for the last, although I'm not a speaker originally, but for the last 20 years, I guess I slowly got into public speaking, and I do it on an occasional basis. Since you mentioned also about cybersecurity, my background is quite extensive in cybersecurity. I started my own company in cybersecurity back in 1999, and I ran it for about 8 years. So those were early days. I remember running the first hacking course in the Abu Dhabi Chamber of Commerce back in 1999. In the early days, not too many people in the Middle East were so familiar with cybersecurity, but with the issues associated more lately with cyber warfare and much more sophisticated attacks and critical infrastructure, it became quite important to the point that today cybersecurity is a much more comprehensive field with lots of verticals and lots of very deep areas of cybersecurity. And I still get invited from time to time. Anytime there's some serious trouble, I get the odd call, sometimes at strange times, to assist. Maybe somebody got into a bank or somebody lost the data on his phone or his laptop and needs to recover it, or they need to track down some individual that somehow has done something beyond what it was supposed to be. More specifically, applicable to the topics, maybe more in depth today, associated with blockchain and cryptocurrencies. And I'd like to kind of differentiate between both, because blockchain is a technology that we can use to build cryptocurrencies, but it's much more than that. It's a technology of trust, is a technology of value or preservation of value and exchange of value. So I've been involved in the last 4 to 5 years, and it's also been quite an exciting ride because the technology has evolved quite tremendously. specifically in places like Dubai, which has adopted blockchain at the government level and forced the private industry to also take steps. But although there has been quite a lot of experimentation and adoption, there's still some areas that are lagging far behind. One example would be legislation and regulations. Other countries in the region have moved faster ahead, maybe because they're smaller, so they're a bit more agile. The interesting aspect about blockchain certainly is that the blockchain and mathematics, cryptography, and certainly cybersecurity share a lot of common elements together. You can say that blockchain is a creative way of using some of the elements of cryptography and cybersecurity. Although blockchain is a technology of trust and security, it lacks a lot of trust. I've done quite a few sessions, about 1 year ago or so in St. Petersburg about blockchain and cybersecurity. And I remember from back last year, the amount of money that got lost in exchanges and crypto wallets was to the tune of about $2 billion. So that really means that on one side, we have a technology that mentions to be secure and trust. At the same time, we get into a lot of trouble. Why are we losing such large amounts of money to cryptocurrencies and its implementation? So it's kind of an interesting conundrum that we should be able to address. So it's actually a big challenge. And of course, in the last 3 years, people have moved a little beyond just the traditional cryptocurrencies, more into what I would refer to as enterprise blockchain. So you can say the technology of blockchain has matured substantially more. So people have started looking at how do we use this technology and viable business use cases. And I think it's important to mention that although in the early days, the answer to every problem in blockchain, I think the question is much more complex than that. It is important to use blockchain where it actually makes business sense and not try to just stitch it on every project that we have. When we talk about specifically blockchain, it's important that when you develop a system as well, only a small percentage of that system tends to be blockchain driven, even an enterprise blockchain system. So that really means you're doing something more close to what we would call full stack development, where blockchain is a small percentage of that system. And when we have such a situation, it is important to mention that how do we integrate that small portion of the stack into the other elements that are the complete end-to-end that actually make the system, the front end, the back end, the web servers, the mobile applications, the UX. All of these sometimes play a much more important role than just blockchain itself. Although people like to use the word blockchain and application simply because it's fashionable. I do believe that IT has this thing with fashion, and every 1 or 2 years we introduce a new term, and this term somehow is going to change the way the world revolves. But it tends to fizzle a little bit over time.
Right. I actually wanted to ask you, since you've seen many technological revolutions, is it like every time when new technology appears, people put it on a flag and try to make a hype out of it without actual understanding that in order to use technology, you need to build the actual product, and the product building is long and expensive and a lot of fails, and you cannot apply technology as it is. As you may invent gravitation, but you cannot apply gravitation in your business tomorrow. It's just
actually, I agree with you, but actually there's several things that are important because I've seen many technologically revolutions. Let's take the example of a database, because to some extent, blockchain is kind of a distributed secure database. I've seen from the early days of file structures, or what we call simple file structures. From there, we went to network file structures, which what we call linked lists. Then we went to what we call coda-sealed databases. Maybe some of you may have heard the term or never heard, which is kind of a network multi-relationship. From there, we went to things like relational databases. At one point in time, we had what we call entity relationship databases, but it never really flourished, so we stayed pretty much at the relational database level. We had object-oriented databases that allowed you to store much more complex structures than just numbers and digits and text. Mm-hmm. So you could, but the thing I noticed with every technological evolution or revolution, depending on the amount of change that is done, is that in IT, we keep repeating the same mistakes time and time again. And this applies to blockchain as well. So to some extent, we introduced a new technology. The new technology is highly immature when it is first introduced. Immature from the point of view that it has not been tested in the real world. There is bugs in the code. I mean, every code has bugs. So blockchain, like any other technology, has bugs like any other code that was ever written. Typically, we have one bug for 1,000 lines of code, and we tend to have one serious bug for every 10,000 lines of code. So if blockchain has millions of lines of code, it will take a certain amount of time for the technology to mature and remove some of these potential vulnerabilities in the execution. So, and other, more important than that, that we always tend to forget is mostly the end user. So how does the end user make use of this technology in a practical usage way? The people that design the technology and the users don't always see things eye to eye. So the users will take this technology and try to adapt it to the problem they're trying to solve. When we have magic is when the two meet together in a very strong way, but in most of the times, we have technology in search of a problem and it does not seem to go everywhere or in a very fast way. And one of the best examples for that, it comes from cryptography that is partially used in blockchain. If you have heard about what we call public key cryptography. And in this technology, one of the first applications was to capability to encrypt files or to send or encrypted or signed emails. Mm-hmm. Although this technology has been around for quite a number of years, more than 10, it has never really taken off. And I think one of the problems why it has not taken off is because it is not a user-friendly technology. So although the concept and the security for the technology is there, the users have never really got around to use this technology in a useful and a practical way. So it always has never really achieved what I call mainstream. Yes, people use it, but I think the percentage cases where people are still encrypting and signing their emails today is probably in the 1 or 2%, not much more than there. So it's a very low traction or usage. There's one other thing that I like to maybe mention that here is probably important. And I think this is one of the critical success factors for blockchain. I believe the most successful projects that will come about in blockchain space are the ones where we use blockchain, but we do not know blockchain is there. So we have to think of blockchain as like the engine in a car. It's a powerful engine, maybe it can do 500 horsepower for those that understand cars. However, it's under the hood. You don't really care how it works too much, all the technology underneath, but you know that if you need the power, you can have access to that power. So blockchain is pretty much like that. And I think that the use cases where this happens, that means we put emphasis on the friendliness of the system and the usability of the system, rather than to just spend a lot of time trying to justify why the technology is transparent, why the technology is immutable, why the technology creates blocks and the blocks are linked. The users don't care about this at all. I mean, the average user would, not benefit from this in their day-to-day of their lives.
I agree. And by the way, how, in your opinion, how should the industry promote the products that are based on blockchain? Yeah, currently, startups are still saying, "Oh, we are on blockchain. Hi, give us money." They think that's it's an advantage. In some cases, it's not an advantage; it's a burden. So, what should they say instead? What should we communicate to the customers? How we explain that the security worth paying more money, or worse, having these bugs in the software.
So I do believe that when you provide a solution to the user, you need to speak in the user terms. You need to speak in the user language. So every user is completely different. So let's take an example of a success story in blockchain that I'm familiar quite well in Dubai. It was written by a colleague of mine called Jawad. I don't know if Jawad is around today, but it does not matter. It is one of those cases where blockchain got used, but they don't know blockchain is even there. So let me give you the example. So you're a tourist, you arrive at the hotel in Dubai, and you want to experience a comfortable journey. It's not always a good idea when you're a tourist to carry lots of cash around. Maybe you lose it, maybe you get stolen, etc. So they came with a very simple concept of a mobile wallet application. So you check into your hotel. The hotel hands you a mobile wallet application that takes a few minutes to install. And when you apply for the hotel stay, normally all the hotels will block a certain amount of money. So let's say if you're paying $100 a night, or 400 dirhams, or 800 dirhams if it's $200 or so. What happens is they block a higher amount. And this amount is kind of used for your stay or other expenses. Could be maybe you want to have lunch, or you want to have some water park activities. You want to go for a desert safari, or some other sort of leisure. So with this mobile wallet, what happens is this extra money that gets blocked gets assigned to this mobile wallet. And with this wallet, then the tourist can go around either the hotel or a predetermined set of shops or activities, like the desert safari or water park or the restaurant, and spend directly from this mobile wallet. And it's very similar to the experience that you would have today if you visit China. So if you visit places like Shenzhen or Shanghai, people don't carry cash anymore. They have not carried cash probably for the last 4 to 5 years. So that really means it has become a cashless society. Mind you, whether it's WeChat, WePay, Alipay, and others, it is not necessarily on blockchain, but today we're doing it on blockchain, so we're adding an extra level of security and transparency. So this specific hotel payment application takes that amount of money that gets blocked, assigns it to a mobile wallet, so it gets converted into tokens, but the user doesn't even know it's tokens. The user, for him, it's dirhams, electronic dirhams that he can use. When he's about to check out, whatever is the balance and whatever adjustments or extra needs to be paid gets again assigned to the credit card. So in cryptography and in blockchain space, we have the term we call blockchain or crypto exchanges. So in this case, the credit card is actually the crypto exchange. So the person never really sees any coins, he never sees any cryptocurrency, but underneath the covers of this entire application, we have a highly secure mobile wallet that enables him to pay in the currency that he's familiar with when he visits Dubai, which is the dirham. So it's kind of a form of an electronic dirham that gets converted back at the last minute just before it checks out. So what is really important to highlight here is that you have an application that uses blockchain, but the user is not even told that he's being or is using blockchain. It just knows that it's a safe application. If there was going to be any disputes or any payments, there's complete audit trails from either the merchants or the user of the wallet. So everything is completely transparent and completely available, and no transaction can actually be deleted from the history. So what happens is the tourist gets a much better and a much more rewarding experience, while at the same time using a technology while he does not know that he's using this technology. So I think this is an extremely important key factor that any kind of future application developers, blockchain or otherwise, they should focus on the user experience much more than they should focus on the technology.
Yeah, we have a question in the chat and I would like to comment on it. There is an impression that you have to use technology regardless the dangers that it may bring, the issues or something like that. And obviously, like since we move from paper to digital, we do have new dangers, but it allows us to scale processes that are that need to be scaled, that really benefit the society. So there are always risks in using any technology.
Oh, of course. I mean, like I usually like to, when I give analogy about safety and security, I give the analogy of a car, because obviously everybody understands what a car is. If you go back a little bit more than 20 years, cars didn't even have seat belts. I do remember arriving the first time in Pakistan in probably 97 or so. I sit in the car, I go to put my seat belt and I look, there's no seat belt. So I turn to my good friend, says, "Where's the seat belt?" And he kind of looks at me and says, "Optional." So if you have a $6 or $5 device that is actually optional on the car, then you obviously get, but he told me, "Don't worry, we don't drive so fast, so it's quite safe." The car that you drive today not only has a seat belt, it has an airbag, it has traction control, it has a collision avoidance system, or maybe some type of AI with a lot of extra sensors built in. Does that mean the car is completely safe? No. If you drive a Tesla and you drive it in a completely irresponsible way, you can still kill yourself. It's the same thing with technology. So technology gives you the capability to go faster. It allows you to reach much heights that were not possible before. And I think it's important, technology for us today, it enables us to do things that were simply not possible before. I'm talking about scalability. I'm talking about reducing borders so people can transact with each other many miles or thousands of miles away as if they were next to each other. The same thing as having this chat that we're having here today. Maybe this is also going to change dramatically the way we do things. We are maybe too much addicted to flying, and every time we go and join together in one of these events. But I think over time, this is going to get replaced with what we see here today, in the sense people are able to come together, maybe across countries or across much farther borders, and you have the appearance that you're actually close to each other, and we can chat, we can ask questions, we can exchange knowledge. Although this is a very simple exchange of ideas today, this is going to radically transform some of the industries that we have in the services. One example I foresee is the education world is going to change dramatically, where people in the past in places like US or certain parts of Europe, but specifically more in the US, because university is quite affordable in places like Canada, but we're talking about $6,000 a year, give or take. In the US, it's quite normal for people to pay $30,000 or $40,000 a year just for the tuitions, let alone the rest. So I think our people over time with these new technologies are going to move towards much more online courses and have the capability to access to the best teachers without necessarily having to travel or relocate. So this is going to change the dynamics greatly of how education gets offered. So it is going to be quite important and quite radical as a what I call digital transformation.
Yeah, and by the way, like now when we have digital processes, usually on the back end, they're still paper-based. A lot of
That is correct. Yes, yes, that is correct. I remember, yeah, okay. Yeah, go ahead, please.
What's your estimate on when it will change?
Oh, I think sometimes things never change. I remember when I first arrived in Saudi Arabia for one of the first projects, we were talking about digitizing books and digitizing documents. And as you know, in the Middle East, one of the most important resources that you have in any corporation is the company stamp. If something is not stamped, it's not accepted as a document in many operations. So this was an electronic document management system, and it was going to become paperless. But how do we fix the stamp problem? What ended up people doing is they have the document, they scan it in, they print it again, they stamp it, they rescan it in again. So in reality, it's not a complete digitalization. It's a partial digitalization. And this partial digitalization is not really fixing the problem. And by not fixing the problem, you're not able to accelerate the system. So you're just making a bigger and a faster mess, but it's still a mess at the end of the day. So let me give you an example now from the blockchain space. I have a good friend also from Dubai that I advise and I spend a lot of time with. Chris, I don't know if he's around. We have done an interesting project jointly with the telco organizations. I cannot mention yet the telco organization because the press release is supposed to be going out soon, but let's say it's the largest telecom organization in the world. This largest telecom organization in the world has lots of contracts with its suppliers, and its suppliers are companies like Huawei, like Lenovo and others. Lenovo may be some technical equipment or hardware. Huawei maybe is providing cellular towers or mobile phones, Samsung and other companies as well. So this company with its suppliers have to manage hundreds and thousands of contracts. And they have over 30 operations around the world. The center of their operations happens to be in Europe, but you can imagine the amount of legal and paperwork that actually needs to be done. So you have to deliver 1,000 phones, but 1,000 phones don't get delivered, maybe 997, or maybe a slightly higher amount for whatever reason. So you end up having to do a lot of manual adjustments, resending extra invoices, etc., to actually simplify this whole approach to the solution. So what ended up being done here is to use in blockchain the smart contract technology to actually automate this real world contracts. And these are contracts between supplier and or vendors and the telecom organization. And both parties actually sign this contract and then activate this contract. And this contract obviously has all the rules associated with credits and debits. Now, maybe during the initial operations, these credits and debits are done in tokens, but the tokens eventually get exchanged into one of the currencies at the end. Could be dollars, could be euros, depending on the country in which the operations actually get done, but most likely will end up in euros as the final total. But the real point is that this organization is going to save hundreds of millions of dollars through this smart contract technology. So this is one of the best examples, I would say, of usage of what I would refer as enterprise blockchain, and more specifically, the smart contract technology within enterprise blockchain. So this is a good application of the technology. And a good application in the business context means it allows this organization to go faster. It allows this organization to save money in their operations, and it allows them to be much more correct in their financial adjustments, and while at the same time introducing agility within the business. Now, this is one example, but I'm sure we have many others in which we can apply this same smart contract technology in other industries, maybe like gold, real estate, diamonds, or other supply chain kind of operations where a lot of transactions get done and need to be adjusted at the end.
It is an interesting question. I was asked a lot about smart contracts, and I have certain difficulties of explaining of what they do. For example, you can explain what cloud technology is. You just say, oh, here was an IT department with computers, and now we moved it to Amazon, and they are responsible for it. Or virtualization, you say, oh, it was one operating system per computer. Now it's like many operation systems per one computer and flexible. And with smart contracts, it's like when you sign it, technically it should have an effect on your assets, on your ledgers. And it won't be like this until your ledgers are fully digitized and assets, records, ownership records are moving like in a digital way according to certain rules. And as you say, yes, we do reconciliation in tokens, and then tokens represent euros and dollars. But this is the gap that people don't really they don't feel it, because you can spend your tokens, but money is still on the account. And it's like, oh, I still have the money. Why? What is the token? So it is an interesting question how the digitization will proceed, whether you have the virtual representation first or you digitize the real asset first.
Okay, that's a good thing. Well, it really depends. Whether you have the physical asset first or not. Let's assume that, let's take the example of real estate. Is the building already built, or the house, or you're raising funds to build the house? So in the first context, what you have is you have a house or an apartment with a title deed. So what you're doing is you're digitizing an existing asset that is actually physical. So one is the house or the apartment, and the other one is the title deed, which is the documentation that identifies proof of ownership. So you have to reconcile the two as well, because in a lot of times there is false entries in the title deeds. So we need to do proper audits. So one of the biggest problems in computers has always been what we sometimes refer to as garbage in, garbage out. So, and this applies to blockchain technology. If you put garbage in the blockchain, garbage will be there for a long time.
Yeah.
So once it's digitized, then the smart contracts apply on that specific asset. If you're raising funds to actually build the building, it is actually the other way around. So you're actually, in that sense, the digital part actually comes before the physical part. And eventually when the building gets created and the title deeds get assigned, then they get reconciled with the ownership, which is already represented in the form of tokens. So I don't think there is necessarily a precedence from one or the other. There is another point that I would like to also mention. This thing we call smart contracts. Sometimes in IT, we have this knowledge of always creating words, and the words sometimes mean much more than what they are. First, they're not really smart. There's no artificial intelligence behind these contracts. It's just pure code. And we have some very parallel technologies that we have used for many years. We have used these technologies in object-oriented systems. So one, it's a function that gets called when you talk to the object. So the function is embedded in the object. So here the smart contract is embedded in the token or in the digital asset. Another example where we have used smart contracts is the case of stored procedures. We have used relational databases for more than 10 years. And over these 10 years, we have stored procedures which got invented somewhere along the way. Instead of having the code outside of the database, which did not make sense because this code was everywhere and a lot more bugs, we migrated the common code or the code that we wanted to standardize back into the database. And that's really what stored procedures did. And in this case, smart contracts are actually achieving exactly the same thing. Instead of having lots of code that is common and should be standard, it should be the rules that drive the operations against these objects or these virtual objects known as tokens. We are migrating these rules into a digital form, in this case known as a smart contract. Do smart contracts have problems? Of course they do. It's code. So like any other code, it has bugs. Same thing, 1,000 lines of code, one bug, 10,000 lines of code, a serious bug. So when I used to talk about cybersecurity and enterprise and blockchain technology and cryptography, smart contracts also have vulnerabilities built into them. And this becomes another problem. Today, if you're really serious about doing cryptography, enterprise blockchain, and cryptocurrencies, you have to take your smart contracts and get them audited by a third party. And what this third party will do, they will go through the smart contract and they will validate to make sure that there's no bugs. Now, is this a bulletproof approach? No, it's a manual approach or semi-manual. They have some tools that automate some of the process, but a good portion of that validation is still done by hand. So it's not uncommon to find bugs or deficiencies in that smart contract 3 months after the contract has been live, which is another issue. Because today, when you bound a specific token to a contract, in many of the blockchains, this is not changeable. So what people have started doing is introducing concept of proxies, which allows them to upgrade the contract later on without having to destroy and recreate the tokens. So this is actually quite important. So you have to introduce into the enterprise blockchain solutions that you have a versionally controlled system. So that enables you to upgrade your solution later on when you identify deficiencies in that solution. So you need to have a life cycle management or a change management approach. And these are traditional terms that we have had in IT for many, many years. ITIL kind of standardized this terminology, but it is a mandatory approach if you're really serious about how you architect the systems that you're releasing to your customers.
Mm-hmm. I have actually like several comments and questions. The first one is that, yeah, when you have a digital version of a contract, indeed it has bugs, but you can copy it and you can validate it that the copy is authentic. So you can do like a hash of it.
Of course, yes.
You can do like kind of a formal verification, at least automatic verification. With paper, it's really hard to automate because you cannot search through paper automatically. So it's like one benefit. And the second thing is that, how to say, this concept of a stored procedure versus of a ledger where the procedures are applied for transactions is also a good question. It's like within central bankers, it was a discussion like token versus account-based model. Like, do we embed rules in a token or we have the accounts and then apply rules for transactions? And
that's a good concept. It's the concepts in traditional IT that we have had for many years. And it's the concepts that we call either loosely coupled or tightly coupled. And I think each approach has got pluses and minuses. Tightly coupled gives you more security and more safety because everything is centralized in a distributed way. However, loosely coupled gives you a lot more flexibility to upgrade and make changes, but you may lose some potential security or introduce points of vulnerability that would not otherwise be there. So it's kind of, in IT, you always have this balance between, is it more usable? Is it more safe? And so on. So you always have to have this balanced approach to determine, because if you have a system, and this includes blockchain systems, that is ultra secure, and it will basically make it unusable for the average user. So that really means that, yes, you have a safe system, but you're not really able to build any practical business applications. So you need to always have this balance. And the more flexibility introduced to the system, the more chances of vulnerabilities or operational risks with that system get introduced. But you get much better traction with the users, and you get volume in the usage of the solution that you provided.
We have already a long discussion in the chat. Actually, I will probably go through them and ask several questions. I want to comment on the Maziad question: will blockchain technology be used better in B2B rather than B2C? I don't think there is a difference because it's like radio waves. They're used in every space.
Yeah. Well, I think it does not matter. You know, B2B tends to be higher volume transactions, the same way when we talk about investments, we talk institutional investors. So we tend to focus much more on scalability in terms of operational risk and tightness. But B2C, of course, are the solutions that are going to have the biggest growth potential in the point of view that many of my colleagues are working on solutions that we call banking for the unbanked. And today we have a lot of concepts that have been introduced alongside cryptocurrencies, which don't necessarily have to do any cryptocurrencies, but benefit from their advantages, is the concept of what we call neobank, or basically banks that don't have any bricks and mortar. And that means these digital banks are able to move much more rapidly in offering services. This could be money transfer services, this could be loans, this could be investments into cryptocurrencies or others. In Europe, we have probably about 30 or 40 neobanks. Unfortunately, in the Middle East and Africa, we only have 2 or 3, and it's still very early days. But in places, for example, like UK, we have very big brand names like Revolut and others that have become and have grown extremely fast, although they have had some growth challenges. They have had also some, what I would call regulatory challenges, because at the end of the day, you need to have a base in which you have your regulations to be able to operate and to be able to transact with other institutions, because you know the banking system does not just use traditional peer-to-peer payments. They also use IBAN system and all that. So if you're not in the traditional system, you're going to be locked out of the whole solution. And there's a new generation also of solutions that are coming in the last 2 years that I think are playing also an important and complementary role, is what we call DeFi, or distributed finance. And all of these kind of tackle and integrate with each other. So I think in any kind of solution that you have today is how you put together the ecosystem to build brand awareness and to actually scale up the solution. I'm doing some projects, for example, in what we call real estate tokenization, but real estate tokenization tends to fall into what we call the category of fintech kind of applications. So we're tokenizing real assets, people can invest in those assets. But one thing we quickly realize as we get much further into the project is that it has an intersection point into other technologies. And sometimes these technologies are today known as prop tech, for property technologies. They enable you to have smart buildings, smart management of those buildings, and smart management of the properties themselves. So when you combine these two technologies together, you achieve a much better innovation and much better returns on investment on the people to whom you're providing these solutions for. So we have a lot of these intersection points. So when you go out and you take a technology, this, since we're talking primarily originally about blockchain today, what is important when you're focusing on your blockchain application? It's not blockchain is your center of attention. Blockchain is a small component, is how you integrate this blockchain into other technologies. In this case, could be AI, could be robotics, could be big data, could be cloud computing, or any mixture of the above to actually create the final solution. So it's a bit like when you do your all-dressed pizza. Pizza looks like a simple meal to cook, but if the ingredients don't balance, well, nobody's going to eat that pizza. So, but if, however, you have magic, then you're going to have a successful pizzeria.
Mm-hmm. We have also like a big discussion and comments regarding public versus private blockchains and whether government will use public blockchain, or if government launches its own blockchain, will it be public? I want to comment here just the public and private is probably not the best way to describe things, because you can have a blockchain that is managed only by me, but it's public, so everybody can see it. So it's rather, we should talk about permissionless or permissioned in terms of who validates transactions. And the permissionless will be like censorship resistant, and permissioned obviously not. And I mean, I believe that governments will use only permissioned blockchain.
Of course, I mean, they have to protect their data. But of course, one of the big problems that we have obviously with private permission blockchains tends to be the fact that you have a much less number of nodes. So they become much more susceptible to a foreign attack or potential corruption of the information, what we sometimes call in blockchain the 51% attack. So sometimes it is good to do a complete evaluation of which is the best solution. And one thing that I like to highlight, and it was interesting because it was one of the use cases that I reviewed. It is not from the Middle East, but it's from Asia area, in which they were storing medical data on a public blockchain. And you're going to say, wow, how you can use medical, you have things like GDPR, etc. Well, if you encrypt the data, you're using that blockchain purely as a bucket repository. So yes, it is a block, but it's a blob. No, without the private key, you will not be able to read that block. Yes, you know it's there, you know it has not been tampered with, but the data is safe and secure as long as the private keys stay properly managed. As simple as that. So I do believe that sometimes one should not get carried away that because something is out there, it does mean it's not safe. Example, the people that are today connecting to this session, the new version of Zoom introduced basically end-to-end encryption, where the original versions before 5.0 did not. So that means they got a lot of bad press and they got a lot of problems, etc. So that means as you evolve towards a more end-to-end encryption approach, that means your data becomes much more protected. Now, does it mean that it's completely safe? No, because if you still invade the endpoint device and you attack it either at the chip level or you attack it after the data is decrypted, so that means the persons that are watching this video, you cannot prevent somebody from recording a machine at that PC level or that mobile or device or even an external device. So you'll never achieve 100% security, even with blockchain. You can achieve maybe 98 or 99%, but you're always going to have some touch points that have some risks associated with them. And this is actually an important aspect associated with the way we develop IT systems, which means that the security aspects that you cannot address, you have to look at ways to transfer the risk into somebody else. So you have to have another party that accepts that risk. And the same thing happens today with blockchain keys. So for example, you can use and store your keys in cold wallets or in other mechanisms that give you much better safety rather than to keep the data in an exchange. However, the new services that you see alongside that is what we call custody services that will be able to store those keys in a very safe way, but there's our insured services, which means that if for whatever reason this private key ended up being hacked, your funds are still safe because they're protected by an insurance mechanism. So we have to always look the same thing as we're building the IT systems. So the risk that we can afford or eliminate, we control. The risk that we cannot control or eliminate, we look at ways of transferring it into another party so that we can get on with the business rather than to make something unrealistic or unpractical.
And how big do you believe will be the risk of losing keys? Because everything digital identity will rely on keys. So how can we measure these risks? Because you have a hardware like vulnerability, software.
Today, this risk still remains quite high. Let me just give you some examples. Today, probably the only safe way to store your keys would be on a metal plate stored under the ground, because it's physical, nobody has access to it. And you may laugh about it, but I have friends of mine in Switzerland that have what they call a bunker in the mountains. So they're using the old ski resorts and they dig up. These used to be World War II nuclear-proof bunkers. And now these bunkers are being used to store gold. I'm talking physical gold. And they're also being used to store keys of cryptocurrency wallets of high valid or high net worth individuals. So there is a very big business for that. So they're giving them the safety to ensure that those keys are out of access of anybody else. But for the average person, the closest thing that you can use today, something like the Trezor wallet or the Nano wallet or any other. I'm not trying to promote one over the other because I don't have association with any of these. But the important aspect is both of these or any of their variations do potentially also have vulnerabilities. They are much more secure than just storing the keys on your normal PC or without printing them. However, in the case, for example, of Nano, they had to upgrade the firmware in the past in which people were able to intercept the keys while they were being transmitted between the hardened device and the device in which you're processing the transactions. So there is always an opportunity to have access to the keys. If I go back to the early days of forensics in computers, and we had encryption of hard disk on traditional laptops, people were cooling down the CPU and opening the laptop, and that allowed them to see the keys for the next 60 seconds. So that means, yes, there is always a period of time in any hardware where the keys are visible in clear text. So as long as you have access to the right technology, and what I mean by the right technology, you have governments, you have foreign organizations or criminal organizations that have substantial budgets, and those will always have the capability at some stage to develop technology that might attack the most secure systems that we have today. So it's always a race against time, which means that today it's secure, maybe after 3 months or 6 months, there's a technology that makes it unsecure. So you should always stay attentive, and you should always look at ways to improve how you protect and store your keys. But actually there's a much bigger problem in cryptocurrencies today than that. I mean, one of the biggest issues today, I would say, that has not yet been addressed, but it has been addressed in some of the systems, is key recovery systems. So today, if you lose the private keys of your Bitcoin wallet, your Bitcoins are gone forever. So that means you can scream all you want. So that really means that this concept of recovering the keys, for whatever reason they were lost, this mechanism was not designed into the solution. So that means today, I think the number of total Bitcoins out of the 21 million is probably about 3 to 4 million Bitcoins that are lost forever. That means nobody can recover. So the supply is not actually 21 million as most people would think, but closer to 18 million, because the other ones, the keys have simply been lost for whatever reason.
Yeah, this is definitely an interesting topic. We also have one more question regarding like technical aspect, regarding consensus, that with the growth of amount of nodes, consensus becomes like a bottleneck. And yeah, I can comment a little bit on that, because you can, in a permissioned world, or you use some BFT algorithms, it's not a big issue. because the transactions that we are talking are transactions between companies. There cannot be millions per second transactions between companies, especially if you're talking about two companies. And you always can do reconciliation between only those who are directly involved in a transaction and then with everybody else. So like thousands per second is not a limit. It could be more.
The only comment I would make about consensus mechanisms is that, okay, first, today the preferred one is still proof of work. Some have started to implement proof of stake. But in reality today, we have probably close to about 30 different consensus mechanisms. And I think one has to use the one that is right for the business solution you're trying to provide. So how distributed is that solution, and what is the volume of transactions that you need to handle? Like you mentioned, if it's business to business, small volume, but more secure. If it's user transactions, like for example, payment systems, like similar to Visa or MasterCard, you need to be able to support in the neighborhood of 20, 30 million, but if you go beyond that, let's assume, forget it's even Visa or MasterCard. You're talking now about, let's say, smart city, okay? And you have sensors, IoT sensors. IoT sensors could be an elevator, could be a parking sensor, could be a CCTV camera, making decisions at a traffic light or whatever. You need cryptography and blockchain technologies that support millions of transactions per day. And even that number is becoming not enough. So that really means you need to improve the consensus mechanisms that enable these blockchains to function, or otherwise the blockchain technology is unusable for this type of solution. But definitely in the IoT world, identity management is an extremely important use case that needs to be addressed. And blockchain is one of the technologies that can address this use case. And why is this important? Is because you want to have trust in the data being generated by those IoT devices, because that data may make mission critical decisions about traffic, about transportation, about electricity movement, water movement, or any other kind of movement that we have today in smart cities. So you need to adopt a solution that is scalable enough for those. And are those solutions available? Yes, the early days of those solutions. Bitcoin, you can call it blockchain 1.0. When Ethereum came about, we can call it blockchain 2.0. When we went to 3, 4, and now some people already talk about blockchain 5.0, what we have really done is created blockchain solutions that support as a minimum 1 million transactions or more per second. And the second thing is they tend to be designed to service a specific vertical industry. If that industry is manufacturing or smart city, the blockchain was designed to support the functions of that use case. So that means it has the capability to handle the volume that use case requires to function in a real world scenario.
Yeah, this is like again, like an engine of a car. It used to be that we had 8 cylinders and 200 horsepower. Now with 8 cylinders, you can have 1,000 horsepower. So technology is advancing and advancing, but it's like out of the question. It will be there. We will have a scalable blockchain solutions for different types of things. And again, a Bitcoin is not a good example in here because it has to deal with censorship resistance. It cannot be scaled like up to very big amount of transactions because you have to synchronize all the nodes in the system.
Exactly. It's always a balance. It's what was the solution designed to do? So Bitcoin, although people were talking about it's a payment solution, it's not designed to support the payment solution for the entire world. It does not have this capability. Let's assume tomorrow we remove all the money in the world and we say we only have Bitcoin. We're going to have the biggest crash there ever was. And that is not the crash of Bitcoin as the currency, it's a crash of the technology, because the technology was not designed to handle this kind of volume of transactions. So that really means that when you create a solution, you have to understand what is the end use case that you're trying to service. And then you have to architect the elements from the ground up to support that use case, not the other way around. And this is actually important when you design systems, because we have tried the same thing in blockchain. They came up with the Lightning Network, and same thing for Ethereum. These are sometimes what I would call band-aid solutions. What do I mean by band-aid solutions? They're fixing a problem by creating another problem. So they're just moving the troubles around. So instead of doing the transactions in what we call on-chain, you move the transactions off-chain, and then you commit them at the end of the day or at periodic cycles. So that really means where Bitcoin was designed to solve the real-time to-spend problem, all of a sudden, you're not solving the to-spend problem because the transactions are only being staked and not committed until much later on. So you're introducing extra risk in the system that actually does not need to be there if it was architected from the ground up to provide that, that solution.
Yeah, we end up like, we need to wrap up already because
okay.
This 1 hour passed like very quickly. I enjoyed it very much.
Well, we can continue another time. It's okay.
Yeah,
I think more than an hour, people have,
there's
only so much coffee you can drink. So people have a certain amount of tension span. So they need to go biological break or other smoke break.
I couldn't even follow all the comments in chat because they're like big and you need to like really dig through them. I would, as a final comment, I would add my perspective on that. The blockchain currently for the enterprise gives a very important feature of like per transaction audit or transparency or auditability. And this is a great feature. We haven't had it in the past where you can actually look at the digital data and know that it's correct. Now, if you look at the digital data on some server, you never know. Is it correct or not? Maybe hackers made something out of it. And now you can be sure, and it will save a lot of time and money. It's like I usually provide an example that, look, Bitcoin is a fully transparent financial system. Everybody can look at the server, have a full copy of like history of transactions, and yet you cannot steal all the Bitcoins at once. And the same principles can be applied for every accounting system in the world without the need of mining or like cryptocurrency, etc. You can enjoy the security without that additional thing. So this is very important. And obviously there are many, many, many other benefits or features of using blockchain, but that's, that comes.
I think it's again a balance. I do believe that enterprise blockchain has achieved the right level of maturity, and there's toolkits available today that enable you to build applications or what I call full stack applications very quickly. I do say and believe on the other side that there's still some key challenges that remain. And one of the important key challenges that remain are, for example, things like standardization. So I do believe that things like, for example, blockchain interoperability is extremely important as we move forward. Mm-hmm. And we need to have a much better standardization so that we can build systems that can talk to each other. Because if a certain organization decides to use one blockchain, another one decides to use another blockchain, and 2 years down the road, those systems need to talk to each other because they always do. I think blockchain interoperability and blockchain standards are going to play an extremely important role in this success. The other thing that I believe is that non-profit organizations are playing an extremely important role in driving the success of blockchain. We have example of GBO, Global Blockchain Organization. We have GBA, or Government Blockchain Association. We have the blockchain centers of the various cities. Example, Blockchain Center of Dubai. We have Blockchain Center in India. We have same in Switzerland, Zug Valley. In Bahrain, we have things like Fintech Bay. And these organizations, although they're nonprofit, through their meetings, their associations, they create these individuals to come together and exchange ideas at regular intervals. And I think this intermix of networking goes a long way to make the technology better, more mature, and more relevant to solve the business problems that we're trying to do.
Yeah, George, thanks for the very fruitful discussion. And those who ask the questions will actually
we can answer them on social media. If you if you save the logs, I'll be more than happy. Yeah. If I don't have the answer, I can at least guide them to the right source where the answer will be.
Yeah, we can make the chapter 2. So okay. Thank you very much. And thanks everybody for joining us and listening, asking very interesting questions. So we look forward to seeing you in the future.
Okay, likewise. It was my pleasure. Okay, have a good evening. Thank you. Bye-bye.
Thank you. Bye.